Hello and welcome to Trading Hour. It is Monday, 11 a.m. and we are here with all the cues. I'm Surabhi Upadhyay. With me is Hormaz. And Hormaz, I don't know about the political circles, but 400 par happened. 23,400 was crossed in the opening trades. So the market did make all-time highs and there was a cool-off that came in. And right now, the buying has come back in. So what's very, very clear that this remains a bit of a buy on dips market because the dips are getting bought. That's the important point. And in terms of sectoral participation, it's a complete mix today. You've got economy facing stocks doing well. You've got something like a Nestle, which is consumer, Britannia, which is consumer, that's doing well. There's been some buying on the big blue chip names like Reliance, like State Bank of India. So there's plenty to keep the green side of the screen fairly active today, Hormaz.
The question is how much of a dip is too much of a dip, right? Yeah. Because the dips that come around 20, 30 point dips and they get bought into. But yes, the market is doing well after making 23,400, slipped into the red slightly. But par for the course, I guess, considering the week that we had the last time around, right? We making record highs, then losing biggest single day drop in 4 years, losing 30 lakh crore in market cap and then recovering all of that in the next 3 sessions. It just sums up the state of the market that we are in. The broader markets also are doing well. The PSU banks are doing well. Real estate is doing well. So as Surabhi just highlighted, it's a broad mix of stocks and sectors that are doing well in today's trading session. There you can see the PSU bank index up 1.5%, as is the realty index as well. PSUs in general are also doing well. Power Grid is the top Nifty gainer in today's session, is up 4%, as is Ultratech. Cement stocks are doing very well in today's trading session as well. But we have Unmesh Sharma to start the show with. He's from HDFC Securities. He's joining in to discuss some market fundamentals as well. Unmesh, good morning. Thanks a lot for joining in. What do you make of this market, Unmesh? How do you approach a market like this? Because you are up 3% one day, down 6% another, then up another 3% the next day. The retail investors made the most of this fall. But do you think now it's time to take a bit of a pause, or do you think that there's still more steam left ahead?
Yeah, good morning. I think if you had gone to sleep on Saturday and woken up today, you would have realized nothing's happened at all. I think it's interesting to see how all of this has played out. But in any case, I think the fact of the matter is that this volatility on a daily basis should reduce going forward. One key thing being whatever speculation there was about the formation of the government and all seems to have been put to rest now. Very clinical and efficient execution by the ruling party in that sense. Okay, so all from a market perspective, it's back to business as usual. I think, with the exception of a little bit of consumption and rural kind of focus, which is incrementally happening, we see absolutely no change in the way in which the government will approach either the public finances or the sectors on which they are focusing. So, it's very similar to what we would be saying last week, for example. On the large caps, there's a little bit more value, but that is also where the price discovery is happening because the FPIs have the ability to sell and leave the country. But in the small and mid caps, wherever earnings delivery is there, we continue to strongly believe that incremental flow should be invested in companies which are delivering earnings. So it will remain a stock pickers market. Maybe the market's absolute level may go sideways for some time given how expensive it is, and as we roll forward to FY26, maybe after Diwali or so. But for the time being, I think in the small and mid cap space, the buoyancy should continue.
Okay, all right. Unmesh, good to have you on the show. I remember, a conversation that we had earlier this year. I think it was around March or April. At that point in time, you weren't very optimistic on consumer staples because of obviously the concerns on growth and the fact that it was very anemic sort of, a low single digit kind of volumes that most of these companies were doing. Now the environment is different. Now there's talk of maybe some more populism, at least some more spending on the rural side. Some of these companies have had very good commentary in the fourth quarter result season as well. So what's your sense? And in terms of portfolio stance, is there any shift away from some of the economy facing names to maybe consumer?
Okay, so look, on consumer, I think, that was our stance, absolutely right. And it's worked well, interestingly. So, quite happy to have that. That has changed a little bit, okay, for 3 reasons. One is that this is the type of market where if there is a story, even if the earnings are going to be delivered a year or 2 later, you would still want to kind of play that, it's that type of market. So with the change in the way in which the government went from a single party majority to coalition, and some of the trends that we saw in the elections. We believe that incrementally for the next 5 years, the bottom of the pyramid consumption support will remain important. So from that perspective, rural becomes important. The second is something which we knew already, which is that we are expecting a very strong monsoon. And hence, if you put these two together, what we have done is that we have introduced some rural-facing names into our model portfolio. So it's not a shift really away from government capex, because that I think will continue to remain a big theme. But at the same point in time, taking some money away from cash and some of the things like InvITs and putting them into. We have increased our weight, even though we are overall underweight, but increased our weight on things like Maruti. We have added Britannia, and then V-Mart and so on and so forth. So to play the rural theme.
Okay, so just to follow up on that, you said you've increased the weight on Maruti and added stocks like Britannia and V-Mart to the mix. V-Mart, I guess, because they have a great footprint in tier 2, tier 3.
There is rural tier 2, rural and tier 2. So it's not necessarily just completely that.
Fair enough, fair enough. So V-Mart makes sense. Just on Britannia, I mean, why, when you're talking top pedigree FMCG, why Britannia?
So look, we do have Hindustan Lever. In fact, interestingly, Hindustan Lever, just because of valuations, actually there was a big gap, which we have cut. So we have come closer to the index, but we still remain 100 pips underweight. But what we wanted is something which is in the index. So Britannia is in there, and we wanted to also have enough market cap to be able to play that. So incrementally, if you look on a relative value basis, that is the one that we've added in there,
What about IT, Unmesh? That's the only sector that's not doing well today. And it was one of the top performers last week. The index was up 9%. There's also some supply coming in, considering a large promoter stake sale that you've seen in Emphasis today, likely stake sale as well. With macros not changing as much compared to FY24, do you still believe that the guidance that these companies have issued, say for the likes of Infosys and HCL Tech, do you think that is ambitious even with the conservative stance that they have taken?
Yeah, so look, IT, we are long-term believers. We believe that these are all phases when, there is always this confusion about discretionary spend and, shift. It could have been Y2K, it could have been digital, now it is the cloud, and now finally AI. But eventually, they will muddle through and kind of rise to the challenge. Overall, if you look at IT in our model portfolio, we have a 100 pip overweight, which is something that we've increased recently to slight underweight. Because of three reasons. One is that there was a relative underperformance and the valuation gap is there. And in the large caps, we believe that relative value is the game in town, given the fact that FPIs are also actively participating. But more importantly, what we do have is that on the IT, is that we have taken out of index and even out of classical IT bets. So what we do is that in our IT portfolio, for example, if you look at out of index, we have Emphasis in there. So among the classical names, so as to speak, and then, Tech M, we are overweight. But we also have things like MCX and TeamLease, which are like, kind of technology enabled, so as to speak. So that's how we are playing this. So services, we are a bit underweight in a sense, but if you look at the entire IT pack, we are overweight.
Okay, so let me end by asking you a very simple question, Unmesh. Given the new era that we are in, Modi 3.0, in your model portfolio, I'm not sure what the top weights are, but let's say what should be the top 5 stocks that everyone should have in this new era now?
Okay, I have to pick up my piece of paper to actually able to answer that. But I think we have, let not be too stock specific, but basically, if you look at large banks, we have the large banks in there. We still believe that in the large caps, we have relative value in there. We are playing financial inclusion and participation through things like insurance, and we've cut our weight on consumer discretionary. Finally, after being underweight for a long time, we've introduced things like Orient Electric and Crompton Consumer there. So that would be the third. And we continue to remain very positive on the domestic, infra-facing companies. So cement and building materials is another 100 pip overweight. And to round off, I think bottom up, we do like some of the pharma names. We have a new analyst, who's been quite positive on names like Dr. Reddy's, and Cipla. So yeah, that's how we round up. These are the five.
Just a clarification, you've cut weight on consumer discretionary, but you still have Orient Electric, Crompton Consumer. These are still stocks that you like.
No, cut weight as in we were deeply underweight. We've got very less underweight by adding these names in there.
Okay.
We were through the year we've been very negative on the consumer. We're kind of changing that now.
Well, Surbhi's questions, simple questions are not so simple after all. But Unmesh, thanks a lot for joining in and spending time this morning highlighting your sectoral and stock-specific preferences as well. That was Unmesh Sharma there of HDFC Securities. Time for a short break here on Trading Hour. Up next, we get you what's buzzing in the commodity space. Manisha Gupta joins us on the other side. Back with us here on Trading Hour, and now time to get you what's buzzing in the commodity space. Manisha Gupta is with us. Manisha, good morning. We're putting the spotlight on precious metals. What's the update there?
Oh, well, yes, we've seen a profit taking. You know, April and month of May were great, stellar months. We've seen gains come in for across commodities as a sector. So whether it was energy or soft commodities or metals for that matter, and precious metals as well. But June has been slightly shaky, and we've seen a definite profit taking coming into this space until now. The biggest trigger until time clearly has been the US non-farm payroll data coming in the highest in 5 months and easily beating the street estimates, and much on the higher side is where we've seen the numbers come in at 272,000 jobs being created in US. Now that has led to people pushing off in sense of interest rate cut expectations from a nearly 70% probability in the previous week. It stands at 50% probability of a first rate cut coming in for the month of September. The one rate cut that could come in this year, the markets anticipate that would be in the month of November. Now this has led to profit taking in precious metals for sure. Gold prices, after hitting an all-time high at $2,450, are now trading below $2,300 an ounce. We saw 2% of a cut in the previous week, and gold with that is trading at a one-month lows right now. What also is weighing on gold is China's central bank buying, which was absent for the month of May. So China, after buying gold for 18 straight months, has not bought any gold in sense of its central banks in the month of May, and that also has led to some profit taking coming in here. Same situation for silver also, where we saw prices decline 4.5% in the previous week. Here as well, the prices did hit an 11-year highs of $32, but it's trading below 30 right now. So this one also is a one-month lows coming in for silver. For silver, what is also weighing is US imposing 50% tariff on China imports in sense of solar panels. So that has put some pressure here. Also, when you look at the markets going forward from here, it is going to be about the Fed policy decision that comes in on Wednesday. The retail inflation data comes in on Wednesday as well. So these couple of data events, and ahead of that, some jitteriness is what you can expect.
Okay, all right. We'll watch out for that. Thank you very much, Manisha, for the latest. We do have to take a very quick break. We'll come back on the other side. And then some technical trading ideas coming up. And of course, a quick check on the indices as well.
Back with us here on Trading Hour and putting the spotlight on some stocks that are in focus this morning, and one of them is PI Industries, which is under pressure after a key consumer, Kumiai, has lowered its guidance, and Sonal is here to join us with more details. Sonal, what is the guidance that the key customer has given?
Well, they've cut the guidance. Remember, their fiscal year starts from November and ends in October. So that is how we look at the fiscal or the financial year for Kumiai. Now remember, they had given a guidance in December, and now in the first half, they've cut it by 9% further, citing issues around inventory destocking and global channel as well in terms of agrochemicals business. Now remember, PI supplies pyroxosulfone, which is active ingredient for Oxy, which is an important product for Kumiai. Pyroxosulfone is the largest export product for PI's CSM segment or the export segment, and there have been questions around pyroxosulfone losing its competitive edge or pricing pressure as well. So this has come in as additional or incremental news flow, which is negative for the company as well. Lower guidance is due to global destocking. The company also speaks about how agrochemicals, the sector is facing an issue, and that continues to be the pain point for PI Industries. The management has alluded to these fears in the past, saying that they are expanding their portfolio and there will not be so much dependence on this particular product itself. However, the issues continue.
Indeed, and the stock is also under pressure now, almost 2% lower. But Sonal, stay on. There is also a buzz of the gas sector being included under GST. What do you have with us on that?
Well, you know, there have been a lot of talks earlier as well, but again, these talks have resurfaced where there could be a possibility of gas coming under GST. In fact, Mahanagar Gas had its analyst meet takeaways where they did indicate that discussions are underway to get natural gas under the GST regime. Comments have been sought by end of June 2024, that is this month itself, on the new central excise bill. Now remember, right now, the taxation on gas is as under: excise duty at 14.5% plus state VAT plus procurement tax. So what happens in this case is on the inputs there's GST, but there's no output GST, which does not allow companies to take input tax credit, and it leads to higher costs for them. But the company says now they expect 12% GST rate on gas, and this could benefit stakeholders across the value chain. And this is similar to what brokerages have been saying as well. Citi, in fact, last week wrote that NDA could consider bringing gas under purview of GST, which could benefit the entire value chain. IIFL says that they believe NDA could consider this in the next 12 months itself. And if that does happen, it could further improve sectoral fundamentals. So that is basically the gas value chain. Jefferies has been very specific. They say government is reviving talks to include natural gas under GST, which could lower the gas cost by $0.8 to $0.9 per MMBTU. Andhra Pradesh, Gujarat, Uttar Pradesh and Rajasthan are the 4 largest beneficiaries of VAT on natural gas, because that is where we have the major gas fields. Now, GAIL's consolidated EBITDA could rise by 2%, assuming it retains the benefit in the LPG segment. Gujarat Gas's competitiveness would improve versus propane by 6%, and CNG companies should see higher volumes or higher margins depending on whether they pass on the price cuts or not. But if it does happen, it will be positive, but we'll have to wait and watch, because previously as well, we have seen such rumors.
Wait and watch, as always has been the case in such issues, isn't it, Sonal? Thanks a lot for both of those updates, actually, on PI Industries as well as on gas stocks as well. But moving on, a couple of other stocks that are also buzzing on the back of earnings and the recent news flow. Vamakshi is here with more details. Vamakshi, which are those stocks?
Well, absolutely, Hormaz. Let's keep an eye out on PTC India. The stock is reeling under pressure today. We pointed out in our top 10 segment as well, and we pointed out that the revenue saw a degrowth of almost 2%. They now stand at 3,216 odd crores. The margins have improved slightly by around 20 basis points from 4.1% to 4.3%. But the net profit has taken a beating, down nearly 47% YOY. And in fact, this is mainly on account of exceptional operating expenses, which came in at 20.5 crores in the fourth quarter, mainly towards surcharge on sale of power. So weak set of numbers coming in from PTC India, the stock reeling under pressure. KC, on the other hand, is surging in trade today after the company announced that they have won new orders worth almost 1,061 crores in their railways, T&D as well as cables business. And with these orders, the year-to-date order intake now stands at over 3,000 crores, which is an uptick of almost 30%. Railtel Corp is the last one that we will be focusing on. Order wins here as well. They've received a work order for National Informatics Center Services worth almost 81.5 crores.
Okay, all right, got that. So those are a couple of stocks in focus. Vamakshi, also tell us about Suzlon. I mean, there's been so much chatter about the resignation of this one independent director, citing some sort of maybe misses in corporate governance. The stock was slightly lower last I checked, about 4% down. What's the latest on this?
Well, absolutely. Suzlon is reeling under pressure today, and that is because Mr. Mark Desailly, who's an independent director, resigned with effect from June 8, 2024. Now, he has cited corporate governance standards applied did not meet his expectations, including situations where communications lacked his expectation of openness and transparency. Now, keep in mind that he was associated with the company since April 2012 and was slated to, his term was slated to end in September 2024, but he has resigned before that, citing these corporate governance issues. But on the other hand, the management held a conference call yesterday, and on that call they clarified that issues raised were soft in nature and process oriented, and they said that this will be implemented in due course. They, however, highlighted that none of the suggestions revolved around financial or operational irregularities or non-compliance with the law. They reiterated that all legal as well as financial disclosures were fully complied with as far as regulations are concerned. We also have a note coming in from Nuvama on this whole matter, and they say that Suzlon is turning around its financial position, and the operational ramp-up is also expected to come through in FY25. The management is looking to address the needs of the business first, and they intend to implement the best-in-class suggestions in due course. So given all of those factors, they have not changed their rating. They've given a buy rating on Suzlon, unchanged target price of 53 rupees per share. But definitely this announcement does have a bearing on the stock today, and the stock is reeling under pressure.
Well, Amakshi, thanks a lot for that update on Suzlon. Suzlon has been in focus all through 2023 for the surge that it saw almost through this year as well. It's almost up 30% before today's drop. It's almost a binary, Suzlon. It's either an upper circuit or a lower circuit. It's trying to find a middle ground today. It's down 4%. Closing on levels of 50, and there have been a pretty recent analyst initiations as well on Suzlon. Some of them having targets of 53, 54, one of them even having a target of 60 as well on Suzlon. But today, stock under pressure, down 4%. But moving on then, Samvardhana Motherson is on our radar after Moody's upgraded its credit rating to Baa3 from Ba1 with a stable outlook. Upasna is here with more. Upasna.
Thanks so much for that. Moody's rating has upgraded the credit rating of SAMIL and SMRP, a wholly owned subsidiary of Samvardhana Motherson. The long-term rating of both the companies has been upgraded from Ba1 to Baa3 with a stable outlook. In terms of stock move, the stock has seen an uptick of 6.5% in last 1 month and as high as 57% in last 1 year. Company reported a strong Q4 and FY24 numbers, and looking at the management commentary and outlook of the company has indicated that Europe and North America are 10 to 15% below pre-COVID levels, and emerging markets are driving the growth of the company. FY25 capex plan is 5,000 crores, out of which 2,000 crores will be spent on 18 greenfield projects, and the automotive book business is seen at $84 billion in FY24. 23% of the company's automotive booked business is from EV, and the company is eyeing on newer segments like aerospace, healthcare and medical, and consumer electronics for the growth going forward.
Okay, all right, got that. Thank you very much, Upasna, for the latest on Samvardhana as well. That's favorable news flow, working well for the stock. Let's now go across and say hi to Soni Patnaik, who's joining in. She's, of course, from JM Financial Services. Soni, good to have you on the show today. So some volatility, but the dips are getting bought. What would your advice be on the indices to start off with?
Hey, good morning, Survi. Thank you for having me on the show. So if you talk about Nifty today, we can see that it has crossed the previous all-time highs of, and it's quite sustaining above that. Of course, there's a lot of volatility, but from current levels, 23,500, 23,600 is the range, but it can actually test and then see some resistance or maybe profit booking. So if somebody is already holding these levels, then you can continue to hold until you can see the levels of 23,500, 23,550, and just book your profits. So for fresh entry, it's just not quite wise from current levels. Maybe if you because the stop loss is not going to be quite intact from current levels, as the support is around 23,100 for now. So for fresh entry, after you've seen the profit booking coming in, just wait for that dip to come again, and then you can reinitiate the longs around 23,100 as a stop loss. Talking about Bank Nifty on similar lines, Bank Nifty has also crossed the levels. However, Bank Nifty from current levels seems to be slightly better than Nifty, and it can test 50,500, 50,700. So I think that's holding quite well with a good support of 49,400 for the day. So I think Bank Nifty is something that can be looked at.
Indeed. What about specific stocks? Soni, what is on your radar this morning?
Hi, good morning, Armaz. So the first stock would be from the pharma space. We're seeing quite good momentum. The stock is Zydus Life. So we're seeing a good fresh breakout in Zydus Life. One can buy at current levels, keeping a stop loss of 1,060 and a target of 1120, 1125 can be seen in Zydus Life. The second pick is in Indus Tower. So this stock also has seen very good support around 340 levels and continuously moving from those levels. It's defending that support very well. So it is quite likely to test higher levels of 370, 375 from current levels, keeping a stop loss of 340.
Zydus Life and Indus Towers, two recommendations there from Sony. Thanks a lot for that and your updates on the index and specific stocks as well. Time for a short break. Up next, we get you a discussion on ICRA's latest report on why they see a slowdown in the domestic commercial vehicles industry for FY25. Stay tuned. Back on the other side.
Welcome back. You're with us on Trading Hour. We are now focusing on the auto sector. A report by ICRA says that the domestic commercial vehicle industry's uptrend is likely to be arrested in the current financial year amidst moderation in economic activity in some sectors due to perhaps the general elections and some overall slightly tepid trends. We have with us Kinjal Shah, Senior Vice President and Co-Group Head Corporate Ratings at ICRA. Kinjal, it's good to have you on. I was just looking at the note that you folks put out, and you're expecting that for, I think, medium and heavy commercial vehicles, there's actually going to be a decline in volumes, 4 to 7% decline. So where's the sense of caution coming from?
So let me just take a step back and go to some history. So post the pandemic, if you see, the CV industry witnessed a sharp growth in volumes in FY22 and 23. So around 26% in FY22 and roughly around 34% in FY23. So this created an enlarged base for the industry. Now on this high base, the growth momentum overall for the industry did witness a slowdown in FY24, and it ended with a 1% YOY growth. And our expectation is that the overall CV industry would witness a decline of around 4 to 7% in FY25, as you rightly mentioned, because of the moderation in the economic activities in certain sectors in the backdrop of general elections. Now, coming to the M&HCV industry, so this industry, which is largely 7.5 ton and above segment, that accounts for around 33% of the total CV industry. And this industry witnessed a flat growth in FY24. And we expect that it will witness a decline of around 4 to 7% because primarily the end user of this segment is the infra segment, primarily the cement sector, steel sector, etc. So here in H1, at least we expect that there would be a YOY decline in volumes because of the slowdown in the infrastructure activities during the election period. H2, we do expect that there would be a YOY growth in volumes. However, our estimate is that the growth in H2 will not be adequate to compensate the loss in H1. And that's why we would see this decline of 4 to 7% overall in FY24.
Kinjal, just to get this right, this is not a high base effect problem. You're saying the moderation in activity and largely because of elections, or is there more to it than the usual, election-related slowdown in ordering?
So typically it's perceived that during the election period that the monthly model code of conduct sets in, and during the election period there is a slowdown in the infrastructure activities, and typically the sectors which are connected to the infrastructure activities that would typically see some slowdown during this period. That's why our understanding is that Q1 and overall H1 that would see a moderation, and H2 we would start seeing a rebound in the activities and thus the growth.
But Kinjal, if you are mentioning that the growth in H2 will not be enough to compensate for the losses in H1, do you believe, is that a continuation of the sluggish trend in demand in general? Because in that case, if there is already a lack of demand in the first half, which is causing the volume contraction, the demand would slightly improve, but still not as much as the first half or as the previous years have been.
Yeah, so typically, I mean, if you see the CV industry is cyclical, and like I mentioned, FY22 and 23 saw very high growth, and FY24 we reached overall volumes at around 9,67,000 odd units, which was just below the peak in FY19 of around 10 lakh units. So the base itself has become very high. And because of that cyclicality, we would see a period of slowdown which would stem in. And this would coincide with this period of the general elections. So both these combined, we expect that would see result in moderation and that growth in FY25.
Okay. Kinjal, just hold that thought. We are just also looking at some numbers that we've got from the mutual fund industry, and that's a massive inflow number. I think the net equity inflow number, 34,670. We've not seen, this is probably an all-time high, by the way, in terms of monthly inflows, because at the peak, these flows were touching 23,000, 24,000 thereabouts, and then there was a decline all the way to just about 19,000. 34,000 is absolutely massive, and it ties in with the other data releases that we're seeing from the exchange level as well, that retail has been buying through mutual funds or through direct, but retail has been buying all the dips in the lead up to the election result, and even after the election verdict volatility, we saw it was actually retail buying. And that's a very, very big number coming in on the mutual fund flows. Let's just look at some of the other numbers that are coming through. The flow in the large cap fund category continues to be fairly small. Large caps are not drawing the money, but it is, the mid and large caps, yes, they are getting more of the numbers. Large cap, I mean, yeah, it's increased month on month, but it's nothing compared to the other categories. The mid and large category, the multi-cap categories, they are the ones that are getting, okay, that's a very big NFO number as well. 10,000 crores coming in via the NFO route.
That's a massive number, right? It's 34,000 crores. The mid-cap number also actually 2,600 crores was the mid-cap fund flow, which is almost the highest since November of last year based on what I can see here. So substantial inflows. The mid-caps are drawing the money. The large caps, an increase from last month, but yes, as Ruby highlighted, it continues to remain tepid as compared to mid and small caps. The mid-cap fund flow, there you can see 2605. The number in November was 2666. So it's almost at par with November of last year. So that is some positive data coming in there for the mid-cap. Hybrid fund flows also slightly lower on a month-on-month basis, but mostly flat around 18,000 crores. They were 19,000 crores in the month of April as well. But the overall, the big number is the net equity inflow, which is almost at around 34,000 crores. There, big number coming in.
Absolutely. One of the big launches in the NFO category was the SBI Automotive Fund. And typically, whenever SBI does an NFO, expect large numbers to come in. So a lot of this flow would have been mopped up by that one fund. And then there have been other releases as well. The flows are back in the small cap category as well, as Hormaz also pointed out. Mid cap, small caps, they continue to get in the money. Large caps, I mean, contrast the 600 odd crores that's come into the large cap category. It's far sort of lower in comparison. So all in all, of course, the SIP number will come with a lag, but SIPs have been very steady, clocking those steady sort of inflow figures of around 20,000 crores on a monthly basis. We'll get that number in a bit as well. But this is looking pretty good in terms of the MF inflows coming in, and a very sharp reversal of the trend of petering flows that we were highlighting over the last couple of months. It's very, very clear that when there was volatility, retail investors decided to go all in, and that's showing up in the equity inflow numbers as well. So more on this as we go along. Once we get the SIP number, we'll have more of a, oh, by the way, that's an important category as well. Hybrids are constantly attracting a lot of flows, and the industry as a group is focusing a lot on the multi-asset category and the hybrid category. For instance, balanced advantage. I mean, the communication from the industry has been about keeping asset allocation in focus, given the elevated levels that the equity market has been trading at. And it seems that communication is working, because hybrids are consistently getting good flows, including, of course, some of the multi-asset funds as well. And also, hybrids, in some of the hybrid categories, the taxation is far more favorable. You manage to get equity taxation because the bulk of the fund is either in equity or in arbitrage, and therefore the whole thrust is to look at hybrids as a very tax efficient way of taking exposure to both categories, I mean, equity and debt.
Having the best of both worlds, I guess, in terms of the hybrid funds, right? Almost 18,000 crores, not a bad number. It's still lower month on month, but still almost on at par with the flows in April. But there you can see the large cap, the main fund flow, the 34,000 crore number is the highlight of this release from AMFI there. It's a record high, 34,671 crore as we speak. So, but we'll get more reactions as we get the SIP number as well. But we go back to Kinjal with our conversation. Kinjal, thanks a lot for staying by and being patient with the numbers that came out from AMFI. Oh, we get back to that as well. So the small cap funds there, 2,700 crores, the flows there as well. So numbers picking up for the small cap funds as well. They were a bit lower towards the month of March. They had seen some outflows. Then they had picked up in April at around 2,200 crores. Now they're at 2,700 crores as well. So mid and small caps continue to see healthy funds, but overall the main inflow number is the big one.
The other category which is getting a lot of steady flow is flexi cap. By the way, this month, in the reporting month of May, flexi cap funds have gotten more money than large caps, mid caps or small caps, the individual categories put together. So again, the narrative that allowed the fund manager flexibility to go across market capitalization, depending on where the fund manager finds good value at that point in time, looking at the market's construct and structure, that seems to be working, because 3,155 crores have come into the flexi cap category. Sectoral and thematic funds. Yeah, look at the giant surge over here. 19,000 crores have flown into sectoral and thematic funds. A lot of that, I mean, as I explained, one of the big funds was this automotive fund coming in from SBI. But in general, a lot of thematic launches are happening, because remember that mutual fund houses are restricted. They can only have one fund per category. So if you have large cap, there can be one large cap fund, one mid cap fund. But you can have as many as you want in terms of sectoral and thematics, newer niche sort of themes on which fund houses can launch products, and that's what's happening. I mean, there's been a huge push on the sectoral and thematic category. Let's take a break. We'll try and get you some more perspective on these numbers as we go forward, but looking very good in terms of equity inflows for mutual funds in the month of May. Back in a moment. Back, you are with us on Trading Hour, and let's just look at the market as well. The market's holding steady, about 50 points higher, not much has changed. So the Nifty continues to look at some green. The mid-cap index actually is absolutely in sync with the Nifty today. And the Bank Nifty also not too far behind. Bank Nifty is up about 0.3%. So for a change, you've got all the indices absolutely at par and in sync. And there you have the big visuals coming in from New Delhi, the visuals that everyone's been waiting for. Prime Minister Narendra Modi taking charge for the third consecutive role as India's finance minister, only second person to have that honor after Mr. Jawaharlal Nehru. So there you see the shots of Prime Minister Modi taking charge. Now, of course, the much awaited release on the portfolio allocation. That is what everyone's really waiting out to know who gets which portfolio, and of course, where will or who will head the key ministries like finance, like corporate affairs, and so many others, home, etc. I mean, many important ministries. So we are waiting for the portfolio allocation to come in now that the Prime Minister has taken charge. So maybe we should have that also in just a bit. Okay, as promised, let's get back to those numbers coming in from AMFI. We have Abhishek Tiwari, Executive Director and Chief Business Officer at PGIM India Mutual Fund, joining in. Abhishek, great to have you with us. So that net equity number is massive. It's gone above 30,000 crores this time around, right? And that's a huge jump, considering we were in a bit of a declining trend so far this year. What do you think has gone behind it?
So first of all, thank you for having me. I think what has gone behind it is the linearity of returns that continues to follow. I think we haven't really seen a trend which is one way down. But having said that, I think it also, in a manner of sorts, shows the evolution of the investors, where for every dip, there are new and new buyers. When you look at the folio numbers behind these, absolute sales numbers, you will realize what I'm talking is what is making sense. And in addition to that, I think the sectoral and thematic, stories and the narratives which are adding up to what is happening at the broader economy is clearly being able to drive the sales up.
Abhishek, good morning. Thanks a lot for joining in. The large cap funds, they may have picked up from the month of April, but they still remain pretty tepid in comparison to the mid caps and the large caps. There's a lot of consensus on the street going on that the large caps are the ones that offer more value compared to the mid and small caps, but the flows are suggesting completely otherwise.
Yeah, so I think there's always going to be that tussle between shorter term trends and longer term performance. The shorter term trend clearly suggests that the value available in the large caps versus the segment of the market which is small and mid cap, which has done a stellar run over the last 12 to 18 months in specific, clearly offers a lot more value. And I think as a fund house, we have been out there saying the same thing for over 6 months now. if not longer. So clearly, there's more value when you think of looking at that segment from a risk return in the near to the medium term. But having said that, obviously, the longer term picture, because of the 18 and 24 months performance in small and mid caps, and also the thematic funds, is clearly painting a different picture for the investor.
Exactly. I was just coming to thematics because Abhishek, this is an eye-popping number. I don't remember ever seeing an inflow of 19,200 crores in thematic funds. Some of this would be because the NFOs are thematic in nature, right? I think SBI's NFO was the auto sector NFO. But again,
Yes.
What further intelligence can you share with us on this huge number and the trend, more importantly? Because the purists will say that handle thematics will care, don't go overboard with thematics in your portfolio. But these numbers are absolutely, gravity defying.
So what you're saying is totally making sense. I think the numbers in itself is a departure from any of what any of us would have expected. Having said that, the fact is that it also shows, and this is more so how we are thinking about it. When we draw up our plans, the breakup is important to understand. One is that clearly some of these themes, some of these sectors have a far larger representation than it used to have earlier, combined with the fact that the policies and reforms are really been something at the back of every investor and every investment manager's mind, where they have more confidence in terms of backing these themes. Combine that to the fact that the investor in itself has evolved. And let me qualify that statement by first of all saying a large part of it is driven by the returns that they see. But then there is a large part of the investor community which is evolved and who wants to literally participate in some of these themes without really leaving it to the fund manager's discretion. And I think a lot of that is what is driving the thematic and sectoral fund flows.
Oh, okay. I must also point out, I'd completely forgotten about this. There was also an HDFC manufacturing fund that I think came out in this period.
Absolutely.
Yeah. And that I think mopped up over 9,000 crores as well. So there's one large fund house, SBI with their auto fund, there's HDFC with the manufacturing fund.
Yes.
And we're seeing these absolutely gigantic numbers on the thematic side.
Yeah. So my sense is the SBI fund is still not captured in the flows, but it's more the HDFC fund and some of the earlier thematic funds which are getting captured into the flows yet.
Oh, okay. So maybe the SBI fund gets captured into next month's data. So this was largely on the HDFC manufacturing side. So Abhishek, your sense, I mean, these are some of the biggest fund houses that we're talking about. But will we see medium-sized fund houses also keep coming out with more thematics? Is that the construct? Where else would you incrementally going down the year? Where else? Which other category do you expect to see bigger funds coming to?
No, so I can't speak for the entire industry, but I can tell you what we are talking and what we are hearing from some of our peer sets. Some of these sectors and themes, specifically the manufacturing, combine that to maybe BFSI funds for fund houses who don't have that as a separate fund, and healthcare, which essentially are more structural themes and which are pegged to be growing faster than the broader nominal growth of the economy. Are these themes, are these segments which will clearly show its representation. If I may, I would only add, for the benefit of investors to say that just don't get into it because, the near-term returns have been great. Please do review it from a perspective, say, are these broad enough themes? Do they have a larger representative set at the back end? So that these themes and these funds can really be a longer part of your portfolio going forward. And you don't have to keep on twisting and turning when the performance goes through that cycle as well.
All right, Abhishek, we'll leave it at that. Thanks a lot for joining in and sharing with us your insights on the data from AMFI, the data mutual fund data coming out. The big takeaway is the net inflow number, 34,000 crores at a record high. Time for a short break. And up next, we put the spotlight on Heritage Foods, and it's been buzzing for the last 10 to 12 trading sessions. We'll tell you why on the other side. in November of 1996. Now, Chandrababu Naidu, this will be his 4th term as Chief Minister. He's been Chief Minister between 1995 to 2004 and again between 2014 and 2019. Now, during this period, if we look at the stock price performance that Heritage Foods has had, if we can pull the chart up, now it listed in November of 1996. These are annual returns. So, in 1998, the stock had doubled. 1999, it was up almost 4x. Then 2002, it doubled. 2003, it doubled as well in some bit of profit-taking years in between, and in the second stint as well, almost at least 50% gains in the first 3 or 4 years there, 80%, 85, 87%, and then 50%, other than the last 2 years when eventually in 2019 he was voted out. Now in the last 12 sessions, the closing on the 23rd of May was somewhere close to 370. Now the stock at the highest point of the day was at 727. Now that was the high for Heritage Foods in today's trading session. Now, what has happened here is that this move that Heritage Foods has had, the year-to-date gains now are at 38%. Is the best calendar year that the stock has seen since 2012. Now, what is the connection here? Because Chandrababu Naidu's wife, Bhuvaneshwari Nara, she holds a 24.3% stake, and son Nara Lokesh, he has a 10.8% stake in the company. Now, together, the value of their stake, which towards the end of May was somewhere around 1100 crores, now it's already 2300 crores considering the rally that the stock has seen. Now, because of this, so that's the move that we have seen in Heritage Foods and the subsequent reflection in the wealth for the promoter family as well. Now, in terms of financials, Heritage Foods for FY24, the main source of revenue for them is milk. Value-added products is somewhere close to 30%, and the rest coming from fat products and ice creams. Now, they have also done a lot of new launches recently. As early as the 5th of June, they launched a new range of pure ghee laddus under the Truly Good brand. They also launched a new range of ice creams for kids and also introduced new packaging formats for the farm fresh milk and for their whey-based energy drinks. So there are a lot of product innovations that are going in as well. They got a new CEO on board as well in 2021 from Coca-Cola. So that is also showing up in the performance of the stock. Now, because of which, and there was a large transaction that took place in the stock today. Just recently, almost 5% equity change stands close to 320 crores at a price of 725. The buyers and sellers remain unclear, but because of this move, if we can pull up the intraday chart, the stock that was locked in a 10% upper circuit at one point of time had a very sharp sell-off and almost turned negative, and then after that it has recovered from the lows of the day. So there you can see the reaction there. It broke out of the circuit, almost turned negative, actually briefly turned negative as well, and then again has recovered from the lows of the day. So 6.5% higher still is Heritage Foods, still up 100% in the last 12 sessions. Pretty strong moves coming in there for this stock as well.
It's had quite a ride, imagine that. I think 14 days, some 94% gain coming through. It's been absolutely stellar. Well, with that, we're completely out of time. Leaving the market just about 50 points higher on the index. Mid-caps also up about 100 points. We'll take your leave. It's a wrap from the trading hour team, but do stay tuned because halftime report will take the action forward.